Hello, mic test. Just closed the position in crude, and that's what was keeping me from delaying this webinar again. Martin, way too many positions open. So I was short here on this leg. I just closed it. We'll discuss it when you go to crude oil. Anyways, guys, if you are able to hear me, Martin, and anyone else who might be online, just let me know if the audio is clear. Yes, working at my end. One second, guys. Done at my end. So yes, sir. Hey, Martin. Hello, Atisham. Thank you for confirming, guys. So let me just begin very quickly with the. I have still four positions open right now. So let's just begin with our actual stuff. You've already gone through the disclaimer on screen, and so we are conducting this series of trading opportunities webinars currently in the 113th edition. Discussions done in the last webinar, 4 setups played out. We'll see them as we go along in the webinar, and in total 267 setups have played out in the past 112 webinars. We conduct these trading opportunities webinar every Friday, generally at 7:30. But as you can see, I do get delayed. So 7:30, 7:45, something roughly speaking. That is the time we conduct in IST, and in GMT it's 2 p.m. So just convert it to the time zone you are in, and this is the time we go live generally. 5-10 minutes delay might be there. So apart from that, what I would like to mention is we cover these instruments: Euro, crude oil, gold, S&P, and Nifty, and Bitcoin in these webinars. We'll go over them as we go with the webinar. Other than that, you can check my stuff. What do you call the thing which I use to analyze these markets is called Elliott Wave. I have been using it for more than 8 years now, and also have a course with 1600 plus students. You can check it, and also have a book on the subject matter. It's on Amazon Kindle, so electronically available. You can check that as well if you want. Right. Anyways, to and lastly, we also have a track record of 80% plus accuracy for 6 years. Here's the spreadsheet. Takes some time to load up, but you can check it at your own time for 50hours.com/forecast accuracy. And this is above industry standards. That's basically what I just show before conducting these webinars. Yes. Let me check the audio one more time before we actually proceed. Hello. Let me check the audio. Good. Yes, so this is the track sheet. Every analysis produced on this YouTube channel, live webinar or a video analysis report is all here. And as I said, just check it in your own time. And let's now head over to our actual content, which is the webinar. So first analysis is going for Euro USD. This was the analysis in last webinar. Let me just show you what we were discussing here. We were expecting that once again. So we were expecting that the market can straight out go down below 1.0678, or it can just give an up leg and then produce a down. So overall, we were bearish. Now none of this really happened, and it's actually completely doing something else, is what looks to be the case right now. So this one was analysis which did not work out at all, and actually I was also caught on this trade. Let's see that in live chart. So this was the analysis around 26th, because that's when we conducted the last webinar. One second. There it is. Yeah, this was the analysis over here. And we were counting this structure as a corrective leg up. The idea was that below 1.067, I think, or whatever this level was, we will look for shorts, and we expect the market can go like this, make a new low. As you can see, it triggered the shorts but never followed through. So let's see now what's really happening. So here's the updated view I have. I have a minor long position right now on this counter, and the idea basically is that from this point of reference, I'm assuming that we are seeing an A, B, and C probably. That's the idea. Hello there, and good morning to you, Luis. Now, basis of this analysis, I have added a long position. In the overall picture, what I'm expecting is that from here, price level around not even 0.95316, we may be seeing a diagonal kind of structure. So this is this will go to weekly chart if I go back in time. So we don't have time generally in these webinars for something like that. So just take the rough idea. What we are expecting here is just give me a second here. Yeah. So what we are expecting here is that this will continue into something like this. Now the structure is in Elliott Wave terminology is called leading diagonal, and two, there is an overlap between 4 and 1, right? Very bad drawing like this. There will be an overlap. Could be contracting, could be expanding. We will have to see what it is. But this is what we are expecting right now, right? As I said, we don't have very clear confirmation. That's why my position size is also not very big on this one. On the long side, if this is the one, we expect this to be the 2 in a flat kind of structure. And then the market can just go up from there. So down for A, up for B here, down for C, completing the 2. And in case you are wondering what is this 2, this is, as I just mentioned, a flat structure. So we expect this last high around 1.12648 to be tested, most likely, or market to go at least near it, if not tested. So that's about it for our analysis on Euro USD. There is not much to add. It's actually quite simple. And what I would also do is get out if we see finally a movement again below 1.0624. This is the alert, but not here. A little bit below, if the market goes, I will look to exit again, because this too can take multiple different forms. What we have as a flat is just a hypothesis. We don't have any concrete evidence for it yet. So if you guys have any questions on this one, you can just post it. Otherwise, I'll move over to the next chart, crude oil, which I just closed the trade. Like right when we started the webinar, we'll discuss that. Hello, Colin. Colin says he's finally caught alive and has been invited by Martin. Amazing analysis. Thank you, Martin, for inviting. And that's good to see you here live, Colin. Hopefully, you join more lives. So let's head over to our next one, which is interesting crude analysis. Here again, the whole scenario has completely changed. The analysis which we were going with in the last webinar is not the one which is playing out what I'll do is I'll discuss the whole thing in detail right now. So first of all, let me just go over and show you the last webinar's recording and show you what we were discussing. Somewhere here is the analysis for crude oil. So in this one, we were expecting a downward movement. The idea was that we were expecting this market to form an expanding diagonal, right? And in an expanding diagonal, we expect that the wave 4 and wave 1 will overlap. And because of that, you see this downward leg, which we were expecting for overlapping the one. Now, what happened is it did go down, right? So basically, the analysis did play out. However, it went much lower, therefore triggering our hypothesis 2. This hypothesis 2, which I'll show you in the live chart, we had discussed it, I think, 2 webinars ago, maybe in the 111th or maybe 110th webinar. You can check it at your own end. But we had discussed it previously. So if you are paying attention and doing your own due diligence, you would have been alert about the positions. Now heading over to the actual chart, let's see what is the analysis and what was the trade. So this is the analysis which we discussed in one of the past webinars, that if the market goes below this red channel, then we can see the market giving a fall, and that fall can be much deeper. It can even take out the low. I mean, we are not going to discuss if it will take out the low or not, but we were expecting a fall if it sustains below this red channel. So bearish count, basically. Now here is and it is actually playing out. It was our hypothesis 2 second review. So it is playing out, and here is the proper count I'm following on the shorter time frame. We are on 1H. Right, so what we have is first leg down, second leg up, and again a correction or an impulsive leg down inside the correction. And within that, we want to discuss this leg where I took shorts here as well. So what we have is an impulse down. Impulse in an Elliott Wave terminology is 5 legs and nothing more than 5. Dennis is also saying he has been invited by Martin. Okay, that's exceptionally good to see so many people joining in live. Nice of you to join in, Dennis. Same, great here to see you here, Will. So coming back to our analysis, what I was saying was we are looking for an impulse down. Impulse will have 5 legs in the downward direction because it's a corrective move down. So 5 waves in the wave CR and down. So let's see the position we are in on live chart. So live chart is on the left. We have completed the 1 and the 2. Done. And we are currently within the 3. Now, this, if you are not familiar with Elliott Wave, is the fractal nature of Elliott Wave. That is that each of these legs, 1, 3, and 5, will have 5 waves inside of them. So it's like on the outside, it looks 5 down. And on the inside, if you look inside the 1 and the 3 and the 5, it will again be 5 down. So if I were to expand this third, it will again look like this. So this is exactly what you see on the live chart. This is the third expanded. And this is the 1 of the third, the 2 of the third, 3 of the third, 4 of the third, and 5 of the third. Right. And the trade which I just closed right when we started this webinar was taking shorts here. So I had multiple positions on. It was actually a very huge win and a huge trade. So that's why this webinar was also delayed. But the main idea was I wanted to take shorts and close at the target minimum. The target minimum was this last low. Of course, if there's a wave 5, it will go lower, and we already have a marked target here around 78.36. But with the huge positions in scalp kind of trading style, you don't hold till the targets. You try to exit at the target minimum, right? So this is what we did. Traded this leg down here. It was also posted in the Slack channel here. Added shorts, book profits 657, 758. So almost 1 hour in this trade. So now let's see what's really happening here. And see if this analysis has more opportunities for us. First of all, once this third wave completes, we expect that there will be a possible correction for the circled 4. So basically, we do see a possibility of another short appearing in this market. And for that, I can just draw a rough outlook here. So this will be what I'll be looking for. However, what I have generally found is if the trend is too strong, this pullback will be very short-lived and will not give a very clear signal. But yes, we got to do what we got to do here. So expectation is that once this leg down is complete, we will see a 3-wave correction. And if it's a simple enough, clear enough correction, like a zigzag, maybe perhaps even a triangle, then we will be able to catch another short leg down. So wait and watch for now. I can again take some scalps, but I think I have had enough of crude oil for today. And I have 3-4 more positions open, which I'll better monitor instead of going scalping in again. So long story short, crude oil, we just want to look for shorts in the shorter time frame perspective wise, because we are within wave C of a possible zigzag, and within the wave C, we are currently in the third of the C, which will have a fourth and then a fifth. So wait for correction, wait for pullback, and look for shorts again. Nothing much to add. If you have any questions, doubts, you can just post them in the live chat. Otherwise, we'll move over to our next chart. And William, again, 4 people just from the work of our dear Martin. Nice. So with that being said, let's now head over to our next chart, gold, where I do also have a position on, which is not really performing actually. Let's see what's going on there. So here is the chart of gold on screen, and let's just quickly check what was being said in the last webinar on gold before heading over to our current analysis. So here it is, last webinar's recordings, and somewhere here we were discussing gold. So this was the analysis in the last webinar. As you can see, this was the hypothesis 1, that we were expecting a downward movement and then an up leg represented by this arrow down. So I have paused the recording. You can check the whole thing yourselves. I paused it around 20 something. So that was the analysis, that the market will head lower first, and then we can expect some upward movement. The lower movement was for a wave Z, and this was supposed to be a triple zigzag correction, which will have a W, an X, and a Y, and X and a Z. Now it actually did perform, and we will now look at it on the live chart. This is the live chart, and our discussion last time was around here, 26th April, somewhere here. We were discussing this market, and as you just saw, we were mentioning that there is a possibility of a downward movement. And here's the live chart. The market did go lower from here, and it has gone lower after performing a possible triangle structure. This X is expected to be a triangle. It can take some new forms as well, but I'm assuming it is a triangle right now. Right now, where can it reverse from? Either it can reverse right here, wherever it is, because it has completed the minimum requirement of the structure. Let me just show you on the right hand side what we are really talking about. So the minimum requirement for the wave Z, the last leg down in the correction, is that this low is to be broken down, right? Wave Y low. This is the wave Y low. It has already been broken down, taken out, whatever you will call it. So that basically means our minimum requirement is over. Anything it does more than that, like if it goes very fast without giving not in the form of a spike, but by closing at the downward levels below 20 to 62, then that will be a sign that maybe this analysis is wrong. But if it does not do anything like that, then we are expecting a reversal already. And I have a marked level here around 20 to 62, which is also a Fibonacci retracement zone level, not zone. So around 20 to 62, we can expect this market to go. Like one more down leg may be remaining here. However, we are not sure about it, because overall, if this analysis is correct, then bull movement is expected. And in scenarios like that, we don't really expect the downward targets to be respected. So long story short, we don't have the confirmation for longs, but I am already long. The confirmation will come around this high. Above 2340, specifically above 2352, we will have a confirmation for upward movement, because at that point we can say that the Z is complete and this market is now heading for either an impulse up or perhaps a continuation of a correction. But in either case, it will give some upward movement from here. Now, the reason for adding longs without a confirmation is very simple. If I wait till 234050, whatever, then this will be my stop loss. Right now, my stop loss is this much. Right. So you take an early entry, get a possibly bigger reward with the lesser risk. Take a later entry, higher chance of success, but bigger risk. So nothing much to add here. We will wait for this market to show its clear hand with stop loss around 2262. Currently, I have it around 2259. I will move it up as the market progresses. And by the way, if this count does play out, if this really is the Z, then expect new highs, new lifetime highs, of course, on gold. Can even take out 2431 substantially. I think we may have discussed it. Yes. 2470 is an intermediate target. Where are the higher targets? Not in this chart. 2800 and so on and so forth. 2470, and then higher target is 2800 and so on and so forth. So much upside is expected if this works out. Again, nothing much to add here, guys. If you have any doubts, you can just post them in the comments. Otherwise, we'll move over to the next chart, which will be the chart of S&P 500 followed by Nifty and then Bitcoin. By the way, if you are still listening to me, and if everything is which I am discussing is clear, you can also type in clear or understood just to keep me in the flow of this webinar. Yeah, there's one announcement I had to make. We have launched a Instagram page, but I haven't had the time to get the link for it. I'll just send the email again. If you are in the mailing list, I have already emailed it. One second. Yes, there is S&P. Thank you, Luis, for the clarification, as well as Martin. So now let's head over to our chart of S&P 500. It is doing literally the movement as we discussed in our last webinar. So for that, let me head over to the recording from last webinar and show you the chart which we checked in the last webinar. Thank you, Atisham. And here is the chart from our last discussion. Let's head over to our S&P's counts somewhere here. Let me just play the video. And by the way, guys, we were able to pinpoint this reversal. You can just check the last 2-3 webinars. We discussed it and were able to catch it. Yeah, so this is what I wanted to point out. Again, we were expecting that this correction may be continuing. So one more down leg may be seen before we see this leg up, right? So down and then up. This was our hypothesis 1 in yellow, right? And the price at the time of discussion was 5104. And this is literally what happened here on the live chart. This is when we were discussing on 26th April, somewhere here, 5104, somewhere here. And the market did go in a correction. Of course, the correction is not a very clear correction like the arrows I drew, right? But nevertheless, this was the correction, and the market has afterwards gone up and taken out the high. So it has kind of done the bare minimum, which is in a zigzag correction, is taking out the last high. However, I personally believe that this can go much higher. I have a long trade on S&P currently on, which is currently in green. So let's see what the analysis is. So first of all, we think that the first leg up from this point of reference around the price level of 4930 is a leading diagonal up, right? Now, because if it's a leading diagonal up, we expected a correction. The correction has already been in play. Now, by the way, there is one point here which I like to mention, which is not on the chart right now in my counts. These corrections, they do have the tendency to consume time. So while I am currently assuming that it's over here, complete here basically, it is very much possible that it just is expanding in time, and these are just minor false breaks. So basically, the whole theory comes out to this, that even if this count is correct, we will have to hold it with a wider stop loss, because it can just propagate within this sideways range. And just like it has expanded the range to the upside, it may expand it to the downside a little bit, although it's generally not seen in this structure specifically. But who knows? The market can do different things at different points in time. So wide stop, I do have a wide stop here. Let me see where actually it is. 4932. So literally at the low, almost at the low. So again, the idea is a swing play. We expect that if this is the A or 1, then if the B or 2 is complete, we expect another leg up. 1, 2, 3, 4, 5. Right? If the B or 2 is continuing sideways, we don't know how much time it can take. But whenever it's complete, it can then again go up. So hold for the whole thing to play out. Wide stop loss, so the position size cannot be extremely big. It has to be in accordance to your risk management rules. And that is the main take we have on S&P. Let me see if I have any targets for this thing. Well, the minimum expectation will be, we can measure the 1:1. That's not the minimum though. It has done the minimum already. Half of this leg up. So the next expectation is that we can see a retest of this green channel or trend line. So it can take this market around 5170 or higher. So that's our expectation for right now, 5170 or higher. And that's the count here currently with the wide stop, because it's a swing play. Nothing to add here on S&P's 500. If you have any doubts or questions on the chart, you can just post them in the comment section. That's not the kind of questions I take, Gautam. So let's now head over to our last two charts, Nifty 50 followed by BTC, which had some interesting movement. So here's the chart of Nifty. Again, let me just head over to the recording from the last webinar and see what was being discussed in the last webinar. So where is Nifty? Yes, 28 something. So this was the main theme. We were expecting that this market has a possibility of upward movement, and we were expecting possible diagonal structure here, which would have meant that this market will go up from here. Now actually it did go up from here, literally, I think. However, I've changed the counts. Just wanted to show this for the record purpose, that this is what we expected in the last webinar. You can check the whole discussion here. It was mostly a relative analysis based on S&P. So here is the live chart, and this was our last discussion, 26th April. Market closed here. This is when we were discussing the market. So the analysis there was, as I said, of this diagonal, and we were expecting this leg up, which did perform, as you can already see. So this is also one of the analysis that worked out. Fourth analysis in our previous discussions. Now it's the updated count, possible leading diagonal here. I've just changed it from expanding to contracting. Again, the last one theory still holds. It doesn't really matter. I've just done a quick change, right? So now what's really happening is we expect this market is inside a correction because once leading diagonal is complete, we expect 3 waves correction at least. So this is the expected first leg down, and we can see some sideways correction followed by another leg down before the market goes up. However, if the market becomes super bullish, it can also be counted as correction already complete. This is the A leg up, A leg down, sorry, and B leg up, and then C leg down. So what I'm talking about is a zigzag kind of correction. So if the market is super bullish, we can consider this already complete. If not, then perhaps this is heading down for one more leg before it goes up. And for that, we have marked level between 227, sorry, 22280 to 22170. So this is the range where the market can take support if it continues downward movement, right? So overall swing perspective, the bias remains kind of bullish here, with the idea to wait for a little bit more clarity. By clarity, I mean some sort of strong upward movement, strength in the market, something like that. And if nothing at all, then at least it will go and give out this leg down. That will also be considered a clear corrective structure downwards. So wait and watch on Nifty. Bias remains bullish. Short-term perspective, we can see a, let's call it H2. See a small correction down followed by upward movement, and H2 is this. So H1 will be straight up from here. So wait and watch on Nifty. I don't have any position on Nifty itself right now. So that's about it for our discussion on Nifty. Nothing much to add here. And last chart before we conclude this webinar is BTC. And yes, one request, guys. We see a sudden drop in the number of what you call views on the webinars. While Martin is doing his work, I expect other people to also contribute some of their time and share the content so that we can at least cross 1,000 views per webinar. Right, so that really does matter in continuing these webinars. We are already in like 113th of this series, so we want to see a growth here, not a decline. So kindly take your time. Once the webinar is complete, use the share button and share it with at least 5 of your contacts. Right, so now here's the last chart of S&P's, not the S&P's 500. We want to see the last chart of Bitcoin. So let me quickly show what we were discussing in BTC in our last webinar. Let's see if there was something concrete. I think I had some ideas which we discussed, but there was no real setup, anything other than the bearish setup which we discussed. So this was the main bearish setup which we had in the last webinar. I recall the idea was that this is a wave 1 down, 2 up, and this is possibly heading down for 3. Right. And the second idea was that this whole thing is just a sideways range, and the market will just play here a little bit, maybe give a small expansion to downside and then go up. So we'll discuss all that now on the live chart. Let me see if there was anything concrete. Yes, here's this, as you can see. Yeah, that was the second idea. That was a super bearish count. Yeah, this was the trade setup we discussed in the last webinar. Below 60300, we look for short selling this market because at that point the A down, the B up is complete. We are heading down for the C wave, right? So this was a clear setup. That's what I was looking for. 60300 short below that. Now here's the live chart on Bitcoin. 60300 was taken out. Let's see where, when. Right here. So we did the webinar on 26th April, somewhere here. The market take out the low here, did go lower to our almost over target, not precisely touching it to 56166. That was the level. It reversed a little bit above that, as we can see, right? So overall, it did give us a trade setup, right? And it did kind of went to the target as well. I was not in the trade, just to be clear. I'm not currently trading this counter, but if I were, it would have worked out. But anyways, what do we expect from this market right now? We think there are two possibilities here. One is that this is just a simple zigzag like this, and the downward movement is possibly complete, right? Now, with that comes the second possibility, which basically suggests that whenever there is a simple zigzag like ABC, it can turn into a double zigzag. That means there is going to be another series of A, B's, and C's to the downside, and these both are connected by a connecting wave Z, sorry, X. So that basically means a connecting wave X can form here, which can lead to another leg down. Right? I don't have any evidence for it. Right? I don't know which way it's heading. The only time we can say that it is heading for what do you call WXY or ABC X ABC, then it will be only confirmed if it takes out the low around what is this 56,583, right? So that's just a possibility here. There are a few other cases that are coming up. EMPC, first of all, as it says in the guidelines, I'm not interested in your views or counts. And secondly, I don't see a diagonal forming here. I can see where you got the idea, but it breaks the rules. There's no diagonal here. And next time, make sure you follow the guidelines, or I will have to block you. I don't take these things. I don't like these things, basically. So long story short, unclear on Bitcoin. We have a possibility of correction complete and then straight up movement, but at the same time, this correction can still be continuing. So wait and watch scenario. The only thing we can do is we can see a short setup here, as I said, at the break of the low, right? And at the same time, it's far away right now. So what I'll do is I'll just put an alert. So that's about it, guys, for this webinar. And thank you for joining us till the end. If you like it, definitely make sure to hit the like and share. And that's about it. And as I said to you, wait, no posting your counts or anything. I made it clear to you twice now. So with that being said, I'll conclude this webinar and thank you for staying till the end. I'll catch you guys in the next one.